Good morning. Happy Friday. We are live on YouTube. Get a quick audio check here, and we'll get right to it. All right, guys, doing good. Sky, what's up, brother? Good to see you over here on YouTube. Yeah, man, we crushed it together all week, so might as well come out, hang out with the free community as well. For I start, though, still trying to figure out Friday since we hit previous week low. Do you expect today to be high resistance? Excellent question. Yeah, we'll get into all that good stuff here, and we'll touch on that in the pre-market analysis. And as the session develops, we'll talk about all those good things and sort out the business here this Friday. So with that being said, guys, absolutely crushed it this week across all my accounts. So I figured, you know what, I'd take some time this morning, come out here and hang out with you guys. So I will be tape reading this morning, sharing what I'm looking for. We've already delivered all my targets. Really nice price run to the downside, trading into that previous week low. So we will tape read today's session, share with you guys what I'm looking for, and then from there I'll do some Q&A as well. And main things I want to do today is do a weekly review. So I know I do the pre-market analysis on Sundays, but I want to do a review, kind of recap everything that delivered so that you guys can see that for your learning purposes. And then from there, I will review the one setups for life that formed during the AM sessions here this week. So I'll be doing those two things here today. And then as always, I'll take some questions from you guys before I get going and enjoying my weekend. So with that being said, guys, appreciate you joining us here today. Let's get down to the business here. All right, I got 3 minutes till 9:30, plenty of time. Hey, Sass. Hey, Metal. What's good, brother? Eslam, good morning. Glad to be here, man. T, hello. Abdi, good morning to you. Good to be here, man. All right, guys. So let's look at the weekly chart here. So for those of you guys that are working with me directly, you guys remember yesterday, before we formed the body on this weekly candle, I was talking to you guys about how we opened, we traded higher, and then we rejected off that weekly high, signaling that we're going to see a what? An open high, low close candle on the weekly chart. So you guys see how now we got that expansion away from that opening price. And that's exactly what we were looking for yesterday on yesterday's Zoom call. On the basis of this gap that we have here, see how we open traded up into it? We couldn't stay above it. We broke back down below it. So that's telling you it's weak, and that's why we just took out the sell side liquidity previous week's low. Let's make that right here. So heaviness on the weekly candlestick. Looking at the daily chart as well, that S&T divergence at the high is holding, which is something I was monitoring this week. We look at the Dow. That's Cocoa Futures. Sorry, 1 second. There we go. So looking at the Dow and the NASDAQ, we were talking about this Sunday, how the NASDAQ made a lower high while the Dow was running and making higher highs. I didn't go as far as to say this is the top and we're going to drop from here. But one of the things that whenever I see crack and correlation like that, which is what that is, right? Because SMT divergence in a way is a decoupling of the markets. And one of the things that I learned from ICT that was really helpful for me was whenever there is a decoupling in the market, it's many times indicating to you that a shift is about to happen. So we saw that S&P at the highs, and then I think we can all agree this is a nice little rotation to the downside. So for those of you guys that have been working with me for a while and understand market structure components, now it looks like we're starting to price in a long-term high here, or at least an intermediate-term high for the time being. So now we have a high here, and now we're starting to print a long-term high. Why is that significant? Well, very similar to when we were down here and we printed a long-term low. You can see that when you have the right market structure, it's going to give you those explosive price runs that you're looking for. So market structure is very important to be reading into. So going back to NASDAQ here today. So we're starting to get bearish market structure here. We just took out previous week's low. That's why I'm neutral going into today. If I was trading today, the setup I would be looking for would have been an open and then a run lower into 50% of this wick here as a first draw. And then through that, I would look for lower quadrant, and then below that, look for the low down here. But as you can see, we already delivered that on a Friday after having a big down week. So now, answering your question, Sky, puts us in a difficult situation as technicians, right? Because we're bearish, right? We're looking for lower prices. Order flow is extremely heavy, right? We have a breakaway gap up here. We traded higher on Monday, but all we did was trade higher to this gap here, right? And then if you see, look at the bodies there. how the body stopped and turned on a dime there. Those are all things that are telling people that are in the know, hey, look, we're bearish, we're weak, right? And then when you have coupled with it the uninformed money, right? Dumb money wanted to be long on Thursday. And if dumb money wants to be long and we're looking for lower prices based off the tools that we're looking for, you can almost bet your ass that it's going to do the opposite of what dumb money is thinking it's going to do. So, and if you want to learn more about that, you guys can join the free Discord where I'm giving free education every single day. So we saw the open drop down into the previous week's low here. Now from here, I'll have to see how we trade. Just because we took out the low does not mean that's the low of the week, and now we're going to bounce and rally higher. So what I'm watching is, do we accelerate below this daily low? And then if we do, my attention would jump to the 50% of this wick here. So this long wick here, 50% of that dashed line is what I would look for as a drawn liquidity to the downside if we start to accelerate through this low here. And then if we really accelerate today, then we could even get down to this sell side down here. So those are all downside levels of interest. That would put us at the 24,606 and then the 24,410. So just a really nice drop here overnight. So yesterday cratering, today just falling out of bed as well. And we're seeing very heavy order flow. Breakaway gaps left open, very little up close candles, and this thing is just absolutely sinking. So working down to the 15-minute chart, same deal here. Looks like we priced in some measure of a high in London, breaking down. And right now looking at the 15-minute chart, we got bearish order flow, up close candles all being respected. So we have that 50% of that wick that we have down here that we talked about on the daily chart. Through that, we have the sell side down here, and everything top down. Daily, hourly, 15 and 5 minute is all supporting lower prices at the moment. All right, 5-minute chart. So we're accelerating through the current low of day here. So low of day attacked. Through that, if we start to accelerate again, you want to note that wick there. They're leaving equal highs here, so it'll be interesting to see what they do with that today into Monday. But that's what I'll be looking for here. All right, now we're down to the 1-minute chart here. So watch how we trade below this low. If we start to accelerate, then they're going to gun for the midpoint of that wick there. And then let me give you guys some targets for S&P. Okay, good. So S&P hasn't actually reached its low yet, which is good. So it'll be like a 6-sister trade. So S&P is going to want to catch up to NASDAQ and get down into those lows there. So we'll study that on the E-mini S&P. We'll drop down to our 1-minute charts. Let's see. Yeah, about 17 handles down to the sell side for ES. So it should give a decent price run here. All right, 932 here, watching this gap here. Want to see if we can sell off from there. If we do, if we stay in the lower half of this fair value gap, that'd be an easy run down into that midpoint of that wick down here. So from a one setup for life standpoint, because we're so bearish top down, I would not, at the moment, look for this as a run on sell side. Look at it as a manipulation to then run higher. The reason I wouldn't look for that is because of how bearish that order flow is on the daily and the hourly chart. So that's why I'm more predisposed to look at how we trade inside this gap. Let's not extend that right. I want to see how we trade inside this gap here, because that'll tell me if they're going to keep selling off to this wick here and down the sell side. And then if we trade to it and through it, then I could frame a price run into these highs here. But as of right now, everything is still extremely heavy with the markets. I want to keep taking your attention to these higher time frames, telling you it's very weak. Hey, Samrat, I'm doing just fine. How are you doing? Life is good. Life is good. Paid going into the weekend and hanging out with the crew here. AM, what are you drinking? We're drinking some vodka and espresso here. No, I'm just fucking with you. No, we're just having some espresso. Iced Americano. All right, so looking at this gap here, we're trading to it and through it. So now if we close below it, which above it rather, which looks like we're gonna do, now this buy side here comes of interest here to me. So why am I not trading today, Dylan? Why aren't you risking your money on these setups here? Well, look at what we've already done overnight. We've already, from London's high, dropped 500 handles, and we reached targets. For me personally, that creates a very low probability morning session because shorting, in my opinion, that's like what retail is doing, right? Retail sees, oh, look, we dropped a lot all night. Time to go short here on the breakout. And then you see how well that works out for them there. So I don't really want to go short, but because the order flow is so bearish, I had to wait for us to close above this gap here, this one here, to signal a shift in order flow that they would want to attack the buy stops. And you see as soon as they close above that gap there, shoots higher for the overnight trailed stops there. So when I don't have a clear read going into a morning like today, that's what I do. I just have to see what liquidity pools we have in play, what inefficiencies, PD arrays we're working with at the time, and then use that to kind of get a read on what it is that they are trying to do. Islam, yeah. So this is a one setup for life model. Yeah, absolutely is. Yes, sir. So how would you get your entry in such PA when it runs like that? Yeah, let's look at it. So there may be times you won't get an entry, right? So as you mentioned, this is a perfect example, and this is why I trade live every single week with those I work with, because things like this are going to happen, Islam. So it's a really good question. I'm glad you asked. Glad we're here live doing it. There may be times where I can see the one setup for life, like this example right here. All right, we took out sell side. Now we got to see how we trade inside the gap. What do? We close above the gap. As soon as we close above the gap, that immediately puts bearishness to the sidelines, and I'm immediately looking for buy stops up here in the crosshairs. Now, with that in mind, on the closure there, then I could look for aggressive forms of entry. But it might not give me an entry every single time. And it's very important to understand that because you're going to miss trades with every model, with every setup or rule-based idea you're going to have. It may cause you to miss some setups, right? And this model is no exception to that. So you may miss trades. It happens to me sometimes. The cool thing is, though, as you get more experience, you won't miss as many trades, or you'll have other ones. I'll go into a perfect example. Yesterday, I missed the one setup for life. Yesterday, I wanted to short into new week opening gap. So for those of you guys that are in the free Discord where I'm giving pre-market analysis every single day, you guys can see what I'm looking for. And yesterday, I was looking for new week opening gap off that 930 drop, but I wasn't able to trade that setup. What I then had to do was take another trade back up into the first presented gap because I wasn't able to get that ideal short. So saying that to say, over time, as you get more experience, if you're not able to trade the primary run that you're looking for, there's always more setups. And when you get really good at this, anytime you want to sit down in front of these charts and rip it off someone's ass, you can do that. So looking at this example here, what I would do is I would drop down like a 15-second chart and look to get an entry. So yeah, this would not have given me an entry. Sometimes I'll even go as low as the 5-second chart if I want to be really aggressive. And if you look at this run here, didn't even give me an entry on a 5-second chart. So this absolutely would have been probably a mistrade for me. So this one setup for life here, I would not have traded that because it just happened so fast. But the cool thing is, if you understand the one setup for life, at least you understand why these price runs are happening. At least you're not sitting there wondering, man, what the fuck, what's going on? Why'd they run lower first, then higher? And it's confusing. No, it's just manipulating retail, getting them to get short, right? And then taking them to the slaughterhouse. And if you understand the components of that model, this is an everyday thing that's happening. Now, that doesn't mean, of course, like you just mentioned, doesn't mean every day you're going to get a trade though, right? So it's very important to understand that sometimes it'll just run without you. And when it happens, that's fine, no problem. It's going to form many times next week and then the week after that. So when you have models that you see repeat all the time, never a point of concern. Yeah, I believe the 1-second chart would give it to you. So personally, I don't really use the 1-second chart. If I know what I'm looking for, I'll get very aggressive, and I take trades on the 5-second chart all the time. But it's because I know what I'm looking for top down. And if I want to be really aggressive with an entry, then I have no problem using a 5-second chart. 1 second, let me see what that would even look like. I don't look at the 1-second chart. Yeah, well, 1 second was beautiful. Yeah, I personally don't use that time frame very much. All right, so let's see where we're at here. 5-minute chart. And opening range gap. All right, guys. So levels I'm looking at here is the opening range gap now. So they indicated they're not wanting lower, at least for right now. Looking at the opening range gap here from close to open here. Inefficiency here. All right, so what we're watching here is the opening range gap. So we saw an initial drop lower, closed above that fair value gap that was key for my analysis. So now my next draw is going to be the upper quadrant here of the, lower quadrant of the opening range gap here. And then through that, look for mid gap here. To me, this looks extremely bullish. So I think the market's going to have no problem getting a mid gap here. We violated this gap here, treating it as an inversion, closing above it. And now we're leaving this gap open here as a breakaway here. So as of right now, it's looking bullish, at least up to 50% here. And let me see what that would put us at. Yeah, I could get up here to 50%. Wally, don't you think that setup of today to be A plus needs an SMT? No, not at all. SMT is a non-factor for me. If it's there, cool. If it's not, I don't care. I take trades all the time without SMT. SMT is not like a crazy secret, like holy grail, like people try to make it out to be. I don't really understand all the hype about SMT. I mean, it's great, right? It's good, confirmation, but by itself, it doesn't give you anything. Because if you just look for SMT, I mean, you'll see SMT on both sides of the market just about every day. So from my perspective, the SMT is really useful if you know what you're looking for. And then you have an SMT, it just makes it even stronger. But by itself, I don't really require any measure of SMT divergence. Good question though, Waleed. But if that's something that you're using for your model or something you're trusting, don't let me talk you out of it. I have guys I work with that use SMT, and it's something that's very helpful for them. Personally, I just don't see a lot of hype in it. So for it to be A plus, just look at the criteria I gave in that video. If it's not in that video, then it's not needed for me personally to have an A plus setup using that model. I never trade the 15-second or etc. I use the 1 minute maximum. Thanks for the answer. Yeah, and that's the cool thing as well, right? Just because I use the sub 1 minute charts doesn't mean everybody has to use the model, right? As you see, it's forming on the 1 minute chart, 2 minute chart, 3 minute chart, 5 minute chart all the time as well. So can you get more setups and get involved in more moves using lower time frame charts? Sure, but the big thing is like what you're comfortable with. And plenty of people that train with me directly don't use sub 1 minute charts, and they do everything they need on 1 minute time frames. So it just goes to show that the time frame itself doesn't matter. It just matters what you're comfortable with. But for me, the reason I like sub 1 minute charts is because if I know what I'm looking for, man, I'm in that motherfucker, man. And it's not running without me. I'm in there. So that's why I like to use those lower time frame charts. And the cool thing is, right, if the 1 minute chart is bullish, when some people try to make the argument that the seconds chart is like noise or not precise, but if the 1 minute chart is bullish, like here, well, even the 1 second chart, it's going to be bullish doing the same thing, right? So it's all the same price. It's not like the 1 second chart is like faster or different. It's all the same price action. So if you understand how to blend the higher time frame with the lower time frame, then the seconds chart can be really helpful. But if it's not a part of your arsenal, you definitely don't need it. 1 minute chart is more than enough to find a consistent supply of setups. So I'm around 15-minute city here in NQ. Yeah, let me go to my trade. 950s. Yeah, I like that because that also would agree with the mid gap as well. So city here. Still looking at that 945 level. That's still about 100 handles above market price here. Yeah, 945 here. That would take us to that gap. So that's what we're looking for now, gap fill here. And so what allowed me to pivot from initially seeing if they wanted to send it lower to then being able to see, okay, they're going to take it higher, how we traded inside these key levels here. So just the basics of what we covered in institutional order flow. Just that little signature there tells you everything you need to know, that the internals are shifting and we're going to get a run higher. Yeah, and then we also have these overnight buy stops here. So we had these equal highs here, and now we have these here that were just attacked. Right, so shorts from the overnight have their buy stops here, right, and then we have them here. That's just been cleaned up real nice. All right, so now that we're into this hourly fair value gap here, I'm interested to see how we trade from this key level here. Looking at this hourly gap here. The quadrants here. All right, so we rallied here, laid a body over the lower quadrant of it, indicating bullishness, rally higher, body laid over 50% of it. So that's going to be an easy run to upper quadrant, and then even the high of it if we can see some strength through upper quadrant. 920s, yeah. So looking for the high of this fair value gap here. And the reason you can determine it's going to want to attack the high is how we traded the quadrants with the bodies. And that's how you read order flow, candle by candle. It's telling you it's strong, so keep reaching higher. And then that's going to take us into that 945 level again. The draw liquidity that I have currently is, again, this gap, right? But we're not, well, I'll just say what we did. The way we trade is we're not just looking at random like gaps here, right? So we're not just looking at just some random ass gap like this and thinking, you know, thinking this is precision. We're using specific price levels within that gap, right? So what we would be looking at here would be high to low, and then measuring the quadrants here, right? So we traded. See, this is why I try to keep my charts clean. You can see it can get really busy really quick. Let me take this off here. So you see we hit the lower quadrant, smashed above it. Now we have that mid gap here. You know, let me just do that. Let me just leave on mid gap. So this is what I think we're drawing to. Again, because higher time frame is bearish, I would be taking partials on this run higher. So I wouldn't demand it gets there. So if there's enough range for profitability in the trade, I would be scaling out as it's getting into that level there. Because now what I'm interested to see is, do they start to then work it lower from mid gap, or do they keep trading to it and through it, and then we just remain bullish on the day? That's what I have to read into right now. How did you draw those quadrants again? Just the fib tool here. Just classic fib with the 0, 0.25, 0.75, and the 1 level, and then negative 0.5. And that gives you the quadrants. Dylan, what are your targets? Just shared that. I'm looking for, as of right now, once we got that shift down here, I was looking for the buy side here, these highs, and then as far as the mid gap here. But I would be, like I said, if I was in anything long, I would be scaled out a good amount here in profit because we're also trading into that hourly imbalance here. Because what you don't want to do is go long, marry the trade, and then it just comes back on you and keeps sinking. Because you always have to keep in mind that higher time frame institutional order flow here, which is, as of right now, bearish. Oh, yeah. How do I draw the quadrants on the regular trading hours? Yeah. You draw it from the close to the open at 9:30. On regular trading hours, correct. Because regular trading hours is going to show you the settlement price, which is the close at 4:14, and then it'll show you the opening at 9:30. And then that gap that's created from that close of the open, that's our opening range gap that we work with. Yeah, if you're trading futures, you have to be aware of these levels every single trading day. Absolutely. So retracing here, the little fair value gap. Also have an inversion fair value gap here. So like how the market's retracing, hitting the gap, expanding. Again, easy bullish institutional order flow. Every down close candle, every gap is supporting price, telling you what the market's still bullish, and we're looking for mid gap here. What's that would be 24.9? Yeah, so the 40s level, looking for 940. Hey Abdul, good morning. Any trades today? Just tape reading, just reading the tape today, man. Just keeping it light, hanging out here. I decided I would not sleep in today. Come on here live with you guys and hang out, read the tape, answer some questions. And then there is the mid gap here. Beautiful. So you can see the opening range gap, mid gap, bang. Really nice. Really good price action, guys. The month of November has been much cleaner than what we've been seeing, at least for my personal trading, from what we've been seeing September and October. October was all right, but man, September was just a bitch. So now that we've delivered mid gap, I would have 80% of the trade off here. If I was long anything, I would have a good amount of the trade off. And then you can see how all those indications of bullishness, right? Breakaway gaps, things like that. So who was asking yesterday? Oh yeah, Madara. Madara was asking like, what would constitute bullishness? This is exactly what I was talking about in that review. I sent you in the main chat answering your question. This is exactly something that would constitute bullishness here, right? These signatures here in the price action. So now what I'm weighing out here. Oh, Abdul. Oh, that's me, Madar. Oh, okay. Oh, cool. Yeah. Okay. So does that make sense? You see how when you know what to look for in order flow, it's really easy to pivot and be flexible because it's either going to be bullish or it's going to be bearish. And during these high volume times of the day when it's moving, it's really easy to know what you should look for if you are keyed up on the right levels, like breakaway gaps, liquidity, and understanding how all that kind of comes together. So hopefully that makes sense as to like what frames a reversal. And here's a perfect example. So if we would have saw this here inside of that daily fair value gap yesterday in the upper half, man, what do you think that's telling me? It's really bullish, right? So once you see these common characteristics, it is the same thing every time. And if it just keeps melting lower and the order flow stays bearish, then it's giving you that insight even better. All right, so here's what I'm weighing out right now. We have the London highs back here, all of these highs here. How we trade here at mid gap is going to be key. If we start to really run through it and show strength to the upside, then we could definitely see them clear up those highs there. And that would also take us into midnight. Nice little reaction there at the mid gap. Waleed, I know it's bedtime, but what's your top tier psychology books? Trying to get the best of it? Yeah, that's a good question. So from my experience, books are great, right? Especially from people that have done this, can give you advice and things they had to do to get better and breakthroughs they had and realizations they've had more on the psychological side. But I think, and this is just my opinion here, the best psychology book that you'll ever have is going to be the one that you write yourself in your trading journal every single day. And the reason I say that is because a lot of people get caught up on, oh, it's just, Mark Douglas, or this book here and this book here, and that's all I need to, trade in the zone or whatever. And sure, right, they're helpful. There's a lot of great advice there, no doubt. But from my experience, the thing that's really going to move the needle for you, that's really going to fix our psychology or just help us be more aware of it and manage it better, is simply going to be your trading journal. And every day, writing in it, reflecting, seeing what's influencing your actions, what's taking you away from the process, the plan, right? Because at the end of the day, psychology is really simple, right? It's just following your trading plan, right? And if you follow a trading plan that's reasonable, right, that has reasonable risk management, like a loss you're comfortable taking, you have a model that you trust, and if you have a reasonable plan and you're executing it, all you have to do is execute that plan. So when you're journaling and when you're reflecting, what you're going to realize and look into is, okay, well, what's causing me to deviate out of my plan? What's causing me to get emotional? What's causing me to over leverage my accounts because I'm frustrated, right? And then you have to be able to unpack all those things that are influencing your decision making real time. And that's only done through journaling. Like no psychology book is going to reach deep enough into you, help you understand where you're making the mistakes, because we're all different, right? We all have different makeups. We all have different things that are holding us back. Once you identify what that is for you, which is only going to be done through journaling and reflecting, then from there, you can start to really make meaningful progress towards being a consistent trader. So the best trading psychology book you'll ever have is the one you're going to write in your trading journal. Richie, brother, do you post trade recaps on any platform? Yes, sir. On the free Discord I'm sharing in the education channel. So many times I'll post like clips of me live trading. And many times I'll do market reviews, education channel. I'll give you maybe like one component, teach one component around why I took certain setups. So breakdowns, what I'm looking for, why I'm looking for it, pre-market analysis, all those are things that I'm sharing in the free Discord. And the cool thing is it's a little dynamic because I'll actually send you the analysis before the session. So like I'll give you guys the levels that I'm going to be working with, actually trading, risking, and making money on. And then from there, you'll see how that's used. And I'll share my trades and kind of what I did live with the team. Brother, I'm confused. There are more Nasdaq that the price is different. Depends on the broker, which symbol you use. Yeah. Are you using the CFD market or are you looking at the futures? Yeah, so if you're having confusion, just make sure you got to pull up the right symbol. So that would be NQZ, Z is in zipper, 2025. And if you pull up that contract code, that's going to pull up the futures contract for the December delivery, which is what we're trading on right now. Oh, CFDs, I got you. Okay, so you're probably using like US 100, right? Like US 100. Yeah, so if you're using US 100, yeah, that's tough, man. Here's what I would recommend. If you're going to invest in yourself and have, trading software, computers, laptops, whatever, I would recommend buy the data, bro. Like, for all you guys that trade CFDs, like buy the data, chart on your futures contract, because on the CFDs, this opening range gap, like I think we can all agree, is pretty fucking precise, right? Calling a price run from here to here. If you don't have the futures contract, you're not going to have that data. You're not going to have that information because there's not going to be a gap there on the CFD. What you can do on the CFD is you could just go like, because what the CFD looks like is electronic trading hours. So you can put the 9:30 open and the 4:14 close, and you can still see the gap that's there on the CFDs. But it's going to be a little skewed, and in my opinion, I mean, just Pay the $5-7 and buy the futures data. It's well worth it because it's going to give you all these levels. You're going to be working with the right new week opening gaps, the right new day opening gaps. All the levels are going to be consistent. So I would recommend use the futures contract, man, because you can still chart on the futures contract and trade the CFD. And then if that doesn't work for you, then just look at the CFD contract, see which one your broker uses, and just stick with that one. Yeah, but let's say if you saw this move yesterday, how would you put your position? You said you had a continuation model. Where would you put in your position? Where would your stop loss? Hypothetically, yeah, that's a good question. Yeah, so for my trading, if I don't get the yeah, absolutely, brother, no problem. If I don't get the reversal, so there's generally like two ways I'm trying to trade personally, right? I'll look at yesterday's example, and we'll touch on yesterday's one setup for life as a good example here. So yesterday we opened here at 9:30, right? We were bearish yesterday, so at 9:30 they send it higher, they clear the buy side here, right? So that the people that are buying off the open or bullish or whatever, they just absolutely take them to the fucking slaughterhouse. So they sink it at 9:30, right? I did not get anything like short here. So I wanted to drop into new week opening gap, which let me show you where that level would be. So I have indicators that pull this up for me on my other layouts, but just to show you guys, I want to have it on here. And let's extend this baby to the right. Lovely. All right, so what you want to think of new week opening gaps, one of the things that really helped me with good old ICT explaining it, was these levels acting like a huge black hole and a magnet on price. So if you already have bearish order flow and bearish market structure, and you have equal lows, and there's a new week opening gap below it, that is just like a easy draw liquidity. Easy, 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 easy. So looking at this here, right, the one setup for life is they run higher, they clear buy stops. Now you're going to run and attack the opposing liquidity here. Many times what I'm doing in my trading, I want to get short near the high, near the reversal, near that 9:30 opening price. If I don't get that, then I have to roll into a continuation model, which is if I don't get the reversal, well, what's a continuation model? A fair value gap, right? Because it's a retracement to the next leg of expansion. The reason I didn't take this one here is because it was already so close to my target and the risk to reward wasn't good. So if you see what I taught in that one setup for life series in the subsequent videos, if I short here inside this fair value gap and I have to have my stop at least above this one, that's a 60 handle stop loss. So now I'm risking 60 to make 60. That's trash. Like that is a horrible risk reward. Like that is not anything I want to be involved in because the risk isn't giving me anything like good. If I want to put risk on the table, like I want to take something from the market. So the trade I did take, because I wasn't able to get this drop lower here yesterday, well, I was able to see that, okay, well, we have our first presented gap here. Right. They hit new week opening gap, strong bounce. So I was able to see, oh, well, that's an easy 40 points up into the AM first pres. So as I was saying at the beginning of the stream, there's going to be times when the one setup for life runs away from me. It did today and it did yesterday. That's going to happen. Doesn't mean I'm a shit trader. Doesn't mean the model sucks. It just means it didn't give an entry. No problem. The better you get at reading price, you're going to be able to see, oh, there's a setup. There's a setup. There's a setup. Because you just get better at seeing it. So if I miss this initial drop here, well, what do we get after expansions? You get retracements. And if it's going to retrace, what levels is it going to use? It's going to use equilibrium of the dealing range, right? This high here to this low. And then it's going to reprice up into fair value. So that's just the easy little scout there. So if you don't get the initial run, as you get better at seeing price action, you're just going to see a lot more setups and opportunities for them. And that's essentially what I'm doing. So if I don't get the reversal here and I can't get short near that high, then I immediately roll into my continuation model. But as you'll see here, even on the 15-second chart, it didn't give me anything good. Like I was live with the team yesterday, trading, doing all this. And I was looking for a 15-second fair value gap up here, but I wasn't quick enough. This one here happened too fast. And I wanted it to trade up into this 15-second gap here because then now that would have given me like 100 handles. Like that's worth it, right? Like that's something I'm comfortable taking down. But it didn't even give me these 15-second fair value gaps here. So I just had to watch it, crater into my targets without me. But, because you have a skill set, you can then pivot and be flexible. And then you can see that the market was going to rally. And then there was a ton more setups yesterday. I mean, when the market's moving, just basically easy trading. And then you can see the market's basically died here after getting to consequent encroachment. That's not random. Good level to take some partials at. All right, so now to answer your question, Abdul. So looking at this move here, so yeah, let's say you use your position, continuation model, where would you position your stop loss hypothetically? Yeah, let's look at that here. Let me pull up my other charts here. So I would have used this bullish order block here, right? So if I was looking for higher prices here, like into, well, I was. If I was trading today and I wanted to get this run here and it didn't retrace into these gaps here, then that would give me feedback that it's what a breakaway, right? And then I would just use the next down close candle here. So I would buy this down close here. I would treat that as a bullish order block using a continuation model type of idea. Because if it dropped, it cleared the lows here, right? And then they're going to want to take it up into that opening range gap up here that we talked about. And they're leaving this gap open here, this gap open here. They're breakaway gaps. So then the next down close candle or bullish order block, I can buy it. I can buy as it's leaving that range or as it comes back down into it and hits it. And then that's how I would trade the continuation model idea. This one up here, it's so close to that level here. I mean, I could scalp it. If you guys saw, we were talking real time about the inversion fair value gap here. So those are all tradable ideas, right? It hits the inversion fair value gap, rallies. You could drop into like a 15-second chart here. Yeah, I don't even think it offered it. Yeah. Yeah, not even on the 5-second. But yeah, so you see that inversion gap that we extended through. Let me change the color on that here. No, price run there, but nothing that it would have even offered on a lower time frame. So those are a lot of different ways I could attack it, right? I could use the order block here. As it's retracing, I could buy that fair value gap, or I could even buy this inversion fair value gap. The reason I'm not as big of a fan of this entry here is because now we're near my target. I don't like taking new entries near my target. What I'm doing when I'm framing entries and targets, I'm like, what's too far for me? The reason I didn't take that short yesterday is because of these rules here. If I'm looking for the market to trade higher, right? The price run is starting here, and I think we're going to get to this level here, right? Mid gap, let's say. The best, highest probability entries are going to be below this 50% level for me, or near it. So you see how this order block, this down close candle, you see how it's forming at 50% here of the anticipated range. That's still an entry I could take. But once we start getting away from equilibrium of the expected price run, it's too expensive for me. It's like chasing price at that point. So once we start really getting away from this equilibrium price point of a range that we're expecting to deliver, I won't take any entries on that. And that's exactly why yesterday, that example we were just looking at here with the short setup here, right? If I'm expecting it to draw down into new week opening gap, and we got a price run starting here, then it's too far gone here for me because it's so close to the draw. So that's how I use the implied dealing range, which is you're measuring a range that's not there yet, but you're expecting it to deliver. And then I'm using that to frame premium and discount and whether or not I want to take entries, because once we get above 50%, all the high probability entries have been exhausted. So I'm not really interested in taking additional entries at that point. So that's the method I'm using for continuation models, when I wouldn't enter anymore, and how I would place my stop. And the stop would just go below the PD areas, right? So for example, if I'm buying this fair value gap here, stop goes below it. If I'm buying the down close candle on this order block here, stop loss goes below it. So it's just a matter of, if you're bullish, the PDA rates are going to support price, right? The down close candles are going to support price. The fair value gaps are going to support price. The inversion fair value gaps are going to support price. And you just have to pick your PDA rate, right? What PDA rate do you see the best? Thanks again. And yes, I'm Adar on Discord. Cool. Yeah. Good to speak with you, Abdul. Hopefully that makes sense. Let me see where the TGIF would put us here. All right, let's take all this off here. Try to see where TGIF would put us here for the weekly range. I believe that was delivered here. Yeah. So TGIF just as a recap, especially for the newer folks here, it's just measuring the high and the low of the range. Once targets are delivered, that's the key. The market will then reprice back up into the range, up to 20 to 30%, up to 40%. So it can go up to a 40% retracement. But generally, rule of thumb is look for 30 to 20%. Now, in and of itself, that's not very precise, just having this level here. But if you have a level that you think it's going to reach within that, that's what I'm doing. So I'm not just looking at the 20 to 30% range and saying, okay, there's TGIF. I want to see, okay, well, what are key levels or PD arrays that would exist inside that? And then if you see the one we used here, the opening range gap midpoint. So you see how now there's a convergence of two things, right? The TGIF level here. But what do we also have inside it? The range, high to low. And then the 50% of that. And then as taught by the engineer himself, the first 30 minutes of trading, 70% of the time the market will reprice to mid gap. And then you see it got there at what time? Right at 9:53. So it's just always a understanding of time and price. What day of week is it? What time of day is it? What have we already done? And if you understand those timing elements, it makes it really easy to understand what the algorithm's going to do next. Richie, I got a problem with getting good entries. How can I solve this problem? Because I have a good idea on drawing liquidity, but just can't get a good entry. Yeah, you're not alone, Richie. You're not alone, brother. Have you seen the recent video that I've done on entries as it relates to the one setup for life? If you haven't, no problem. Just gives me an understanding of how much you've learned from me already. No, I haven't. No problem. Definitely give that video a watch, man. Definitely give that video a watch. The insights in that video is exactly what I tell guys I mentor one-on-one and gals. My team that like literally trades with me, like that we speak just about every single day, or not every day, but multiple times a week, giving them feedback, looking at their trades. Like the things that are in that video is the exact feedback I give my team directly and my paid one-on-one and my group mentorship clients as well. So the insights you're going to get there are really good. The big thing that you're going to realize in that video is it's a paradigm shift, right? And the paradigm shift is basically retail chases price, smart money predicts price, right? And if you know the drawn liquidity or you're confident in your drawn liquidity, you have to take an early entry. And many times the early, and when I say early, I'm not saying enter before your model forms, but I'm saying you have to enter early in the price run. Because what happens, and this is exactly, what retail trading 101 is, okay, I'm bullish. All right. Okay, I'm bullish. I think it's going to go higher. Well, let me just wait for some confirmation. So I'm not going to buy down here. I'm not going to buy down here. I need to really see it run, and then I'm going to buy it after I get confirmation. And then what does that look like? Well, you're going to buy it way up here in the upper 50% of the range, which is the opposite of what I just kind of broke down here. The difference between smart money is the smart monies we're predicting the price runs, right? So we're expecting it to get there, right? Which goes that being said, right? If you have a drawn liquidity, you're expecting it to deliver that draw. But now here's where the paradigm shift happens with the entries. You have to take the hard, uncomfortable entry, which simply means getting in early ahead of the price run. Because it's easy to wait for confirmation and let it run and then, oh yeah, I'll buy here because it's bullish, it's already proved it to me. It's actually really uncomfortable to enter early in the price run. Like as soon as we get the closure above that gap here, or as soon as we drop down into this down close candle, that's like an early hard entry per se. And the reason it's the hard entry is because it's early in the price run, and early on, it's very uncomfortable to enter early, which is why we do it. Wait for confirmation. And many times that leads to chasing price. So even if you know the draw, it'll deliver that draw, but because you didn't have a good entry, and you maybe chase price or you didn't enter at optimal levels, now that's causing what? A huge stop loss or you're entering just too late in the run, and what would have been a good setup if you had a good entry turns into a loser. And that's all fixed by what I'm talking about here. Understanding how to take the hard entry, how to take the early entry, and that video is going to break down exactly how that's done. And if you understand that, that's going to be a huge step forward in your understanding as it relates to positioning for the draws on liquidity that you have. And just that paradigm shift there alone is going to shift your risk to reward. Your trades are going to be better. A lot of my trades are zero drawdown entries, meaning I get in and it just zips right to target. That comes from taking the hard, early, uncomfortable entry. And over time, as you train yourself to do that in backtesting, in your studies, it gets really easy to do it. So it's only a hard, uncomfortable entry at first. But after you study it over time, it gets really easy to take that entry because you've just seen it hundreds of times. So it's going to be a mix of watching that video so you know what you're doing. And then from there, that's not going to be enough. You have to backtest it. You have to get in your charts and see these things repeat. And then from there, you're going to be crushing it, Richie. All right, so it looks like they're going to want the overnight highs. So that's what I'm looking at here now. They left these relatively equal highs here. So that looks like a draw. And then on a closing note on that point, one of the other big components when taking, hard entries and whatnot, like what that really means is also buying after markets have dropped or while they're dropping, which is hard to do, and selling either after markets have rallied or as they're rallying, which is kind of hard to do as well. But it's easy to do with the proper training and the proper practice, which in my YouTube channel, you'll see how to backtest. All those things are taught here on my YouTube channel. So you can see exactly how to enter, what you should be doing there, but also how to journal it, backtest it so that you can get good at trusting it yourself. Because it's one thing for me to know how to do it, right? But I want you guys to be able to know how to do it as well. And that's only going to come from rolling up your sleeves and backtesting it yourself. Richie, which video should I watch? I would start with the one setup for life series. And then in that video, I think it's going to be video 4. So the one after institutional order flow, I show you how to get entries using the understanding of institutional order flow. Yeah, I believe the video is called 3 entry strategies every smart money trader should know, price action trader should know. It's in that one setup for life playlist. So if you look at the playlist, one setup for life on the YouTube, and you take a look at it, it should have it in there. And then that would be a really good start as it relates to entries and what you're trying to do there. All right, so I'm watching this imbalance here as well as this bullish breaker. And we have relatively equal highs there. I want to see if they want to clean up those highs here. Thanks. I'll rewatch the watch videos too. It's only going to help you out. So yeah, definitely a good idea. Only going to be better for it. So looking at this price run here, we have that fair value gap here. The level I'm watching that we have to stay above would be the breaker here. So we have a low, lower low, up close here. We have to stay above that here. If they're going to take it up into those highs here. Metal TGIF delivered. Yes, sir. All right, so we traded down to the low of the breaker here. Bit sloppy in here. So one of the things that I talk about as well a lot is how understanding. I was just asked a little bit earlier about stop placement and how you place stops as it relates to entries and stuff like that. Understanding stop placement is a derivative of understanding how to read the charts very well, which is why good coaches, good mentors, ICT, other people out there that are worth their weight in salt, will tell you that you have to learn how to read price action first. All right, because if you can first learn how to read price action, then it's really easy to know where your stop loss goes, right? Because if we're going to rally into the highs and the market should find support at that breaker, what am I saying there? That the breaker is an invalidation level, it shouldn't get below it. So what does that mean for stop placement and how you would trade this particular run? Now, I'm not saying you should trade. I'm not saying you should try to be buying here. I'm just saying if I was trading it or if I was using a breaker, where would the stop go? It'd have to go at least at the low of it. You see it gets close to it, but it wouldn't have tagged it, at least as of right now. Getting a little sloppy in here, but the understanding that you're looking for as it relates to, well, how do I place a stop and how do I get good entries and good stop placements and all that good stuff, that's just the derivative of understanding how price action should deliver, right? Because if I'm long here, I don't want to see it trade down through the breaker and this fair value gap here, right? So the stop loss would just comfortably go like right below that or below this breaker here, because I don't want to be long if it trades all the way down through that like we're seeing now. And looking at the S&P here. Yeah, S&P is looking a little stronger than NASDAQ here. After that initial run to the mid gaps, got real sloppy in there. So just run higher to mid gap and just chopping. Richie, the chopping because we delivered the TGIF. Yeah, that's a very good observation. So one of the things that you have to weigh out as it relates to like what's the next price run, is it going to be high probability or is it going to be chop? Is you have to understand what's there left for the market to do, right? Once I see a TGIF delivered either Thursday or Friday, because it can deliver on Thursday as well, I'm usually done for the week after I see that. Because if you think about it, right, once the weekly range here delivers, right, it creates the open, it creates the high parameter, it creates the low, and then we retrace off that low and close, right? What's there left for the market to do as it relates to a power of three perspective? Nothing, because it's already open, made the high, dropped, reached targets, and then it pulled back into the range and closed off the low. So when you see that, what else is there left logically for the market to do? Consolidate, chop, So what I do once the TGIF is delivered, I'm very patient, and it's more likely just going to chop, give managed expectations in small scalps. So once the logical run already delivers for the day, then in my mind, what else is there left to do that's still high probability? And in my mind, it's nothing. Right? Yeah, the weekly range power of three is done. Absolutely, exactly. Can it move and do something after delivering TJF? Sure, but you got to think we're not here gambling, right? So like it could do something, sure, but you have to have probabilities and a statistical edge behind what you're doing, right? And if it's already delivered the whole power of three for the weekly range, then what else is there to do outside of small scalps? Small scalps would be looking for a run to these highs here, getting in, getting out, studying that. Outside of that, though, there's nothing else for it to do, and it just more so turns into just amateur hour gambling for those traders that can't get off their charts and just have to gamble. They can't leave the casino. They're just going to stay here and chop up their account, and that's usually what happens after that TGIF delivers. Yeah, good question. Absolutely. Alrighty, so let me look at the dollar here real quick. Do a quick review for you guys going into the weekend. So looking at dollar this week, we saw a weakness on DXY. So we attacked that high here that we were looking for, and then after that, we pulled back into the range. So what I wanted to see this past week, as we talked about, is how we trade inside this bullish breaker here. So you can see we're still working inside that level. I'm still curious to see how we trade here going forward. So this level is going to be instrumental for me longer term. Do we remain bullish with respect to the dollar, or do we see the market start to collapse, right, and start to get below that breaker? Because if we lose that, then that would not be bullish for dollar. Let me look at the bond market here. Yeah, so treasuries, that daily fair value gap we were watching on the treasuries so far, it's sending price lower. So we're starting to see weakness on treasuries. So we'll see how that influences US dollar. But key level I'm still watching here is the breaker. And then for NASDAQ, really nice drop here this week. And now they're just running it against anyone that was still short below this daily low here. So previous week low delivered. Now going into the next week, man, it's going to be really interesting. We have these relatively equal lows here, and I think we'll have a really good trading week next week now that the market's really moving. And you can see they engineered these relatively equal highs here. They dropped it down into the fair value gaps you're looking for. A nice little price run there. Islam, I'm working on demo today and enjoying the session provided by you. Really helpful. Many thanks. Yeah. Glad to be here, Islam. Glad you're getting in the reps, putting in the work, brother. It's going to pay off. Why do you consider that a breaker block, not a mitigation block? Really, it's the same thing, bro. I wouldn't. I see what you're asking, like from a technical standpoint. Like, why is it? Technically, it is a. Let me show you. You're referring to dollar, right? Dollar daily chart. So technically, on this time frame, let me see. Yeah, so because there's no swing low on this time frame, it's technically a mitigation block. But if you just drop into a lower time frame, like a 12-hour chart, you can clearly see the low here now. So really, every mitigation block is going to be is going to be a breaker block. So I just say it's a breaker because at the end of the day, I know on a 4-hour chart, on a 12-hour chart, it's a bullish breaker. So I just call it a breaker because any retracement against the underlying order flow is seeking stops. So if it's a retracement against the underlying order flow, then the bearish order block that sent us lower is going to reverse its role as a bullish breaker block to rally. So that's how I look at it. It's not really a big deal. So if you call it a mitigation block, are you wrong? No, you're still using the same insight. So it doesn't really matter. Any retracement I consider a breaker, essentially. It just helps me keep it simple. All right, guys, we're going on about 10:30. So that's about it for me. Any questions from you guys before we get going? I want to make a few minutes here for Q&A with you guys. me see what we got here. Yeah, so a lot of good one setup for life trades this week here. So I'll review this here with you guys, and then we will get to it. So I actually traded this one here. Finally, right? One of the one setups for life I was able to trade this week. This one was a really easy one on Monday, right? So they consolidated it. They left highs. They left lows. Whenever you see that, you should start licking your lips because you know they're about to serve some retail traders ass up on a platter to you. At 9:30, they do what first? They run it higher. Oh my goodness. What are you looking for with the one setup for life now? Bearishness, right? The market to drop and do what? Clear lows. Why would it clear the lows? Because retail, right? Dumb money is going to look for strong support here, right? Or they're going to be long with a sell stop here. We don't care. We just understand the market's going to want to attack that. So Monday, beautiful one setup for life, running higher first at 9:30, and then just a really nice breakdown to attack the opposing counterparty. So that was the one setup for life on Monday. Tuesday was the bank holiday trash price action, and I'm not really worried about Tuesday. And then Wednesday was the day post bank holiday. So let me show you guys something here as it relates to the economic calendar. So if you see, what did we do from Monday to Wednesday? Really nothing, right? It was just chop. Why is that? How could you predict that? Economic calendar. So between these 2 days, on Tuesday, we had a bank holiday. So when you have a bank holiday, you're more likely to get this type of rangy price action. And when was the cleaner price action? Thursday and Friday. Would you guys believe how many traders blew their fucking accounts before we even got to Wednesday? Come on, guys. Come on, guys. Understand the economic calendar, right? Wait for the better price action. Thursday, Friday. Why are you like fucking around on, consolidation bank holiday bullshit? You're just asking to blow your account. So it's like you have to understand when the probabilities are in your favor and out of your favor. And you can't be a gambler. You have to understand what you're doing. You have to have rules. And if you're mentored properly, your rules should not have you trading bank holidays, at least with a lot of leverage. Now, people that are already profitable, you already have experience. Obviously, you can get in there any day and find a setup. I'm not talking to you. I'm talking to traders that are still finding their consistency. And you're probably not going to do it in this sloppy price action. So just some insight there for you guys, kind of weekly review using the economic calendar. And then the price action is Thursday and Friday. And one of the things that I always say is these are things you guys want to log because they repeat, right? This isn't just something that happened this week. The reason I'm able to expect these things, I have rules like, why am I not live trading Tuesday and Wednesday? Why did I get paid on Monday and then get paid on Thursday? And then now I'm hanging out with you guys here on Friday. Like there's a reason my schedule is the way it is. Right? There's a reason I structure everything I do. And I want that to be the same procedures you guys do so that you guys can avoid the lower probability action and get in here on the easy days when it's easy to make money and you're going to have easier price action, which in this case would be what? Thursday, Friday. Because bank holiday Tuesday, days after bank holidays can be pretty trash. And then the easier trades are going to be Thursday. Michelle, you are the best. Thank you. Appreciate you. Thanks for joining. Richie, do you have a monthly subscription for live? Currently do not. Well, in certain circumstances, I will. For those that may just need the live sessions. The reason I don't do that as much anymore, I used to just open the live trading room. But what I realized is for somebody to have everything they need to be an independent trader, which is what you guys want, right? You guys want to be able to have this skill set yourself. You don't want me to have to give you fish all the time. Like you want to be able to watch me fish enough to where, okay, I know his technique. I know what he's looking for. I know the draw before he even calls it out. Holy shit. Now that means you're really good now. And then once you're at that point, you don't want to be tied to anybody. You don't want to be like, you don't want to be a career trader who's hanging out on fucking live streams. Like, you get what I'm saying? Like, how are you going to be a professional, right? And you're hanging out on live streams for your whole career, right? So it's good to do it first, right? Because that's how you're going to learn how to read price, how to find your own setups. But over time, the whole goal is independence. And what I realized is live trading by itself was not giving that independence. What is the full coaching and the mentorship, and which is what I'm giving. So the reason I stopped doing just live trading is I realized it wasn't giving traders what they needed, and it wasn't making them independent. Instead, it was just making them reliant on me, and that's not really what I'm trying to do. I can do whatever I want with my trading and make as much as I need. I want you guys to be able to do the same. I want you guys to be able to have that skill set, and those that work with me to have that skill set as well. And from my experience, just the live trading room itself doesn't deliver all of that. Liquidity Raider, hey Dylan, just wanted to say thank you for all you do week in and week out. It's much appreciated for real. Appreciate you guys. Thank you guys very much. Metal, nice to catch you live, Dylan. Usually have to watch back your market outlook vid later. Got to run now. Thanks for the stream. Have a good one. Appreciate you joining, sir. And I will see you guys on Sunday. All right, guys. If this was insightful, do hit the like button on your way out. Helps us out here. And I do not see any more questions. So I will bid you guys a great weekend. Take care. I'll see you guys on Sunday. We'll be back to business. And I'm going to look to do some of these more often. Once I'm paid, I'm padded out on my accounts, come out, hang out here live with you guys, share some insights, take some questions, and hang out with the community. Is it possible to do it again on Friday? Yeah, it'll probably work out the Fridays anyway, just because once I'm paid, as you guys saw in the main chat, Tommy shares as well, we all have the same procedures because we're all doing the same things for the most part. Once we're paid going into Friday, like myself and my team, we don't trade, right? Like if we're banking going into Friday, like I'm not going to open up risk on Friday. So absolutely. We'll definitely hang out on Fridays, especially once the bag has been secured. Yeah, according to your schedule, of course, but absolutely. So for me, the priority is my trading, right? You know, I'm a full-time trader, like that's what I do. But once I get business handled there, I'd love to hang out with you guys, absolutely. All right, guys. Don't see any more questions here. Also, letting you guys know, I've been looking through the feedback you guys have been sending me as it relates to topics you guys would like to see on the YouTube channel. Do keep those coming using your guys' advice and using that to put together videos in the future. So let me know what you guys want to see, and I will deliver. Have an amazing weekend, guys. Take care. Stay safe, and I will see you guys here on Sunday. Have a great weekend, everybody. Take care. Yeah, pleasure, brother. See you, man.